the end of the second quarter, and we are in fairly solid territory this week with Brent crude oil trading up this morning at above $116 a barrel after that big retreat last week from the high of 123 down to 109. It is now on the march back up again. So it's clearly a week when the world is in optimistic sentiment. All is well as compared to last week where all was, it appeared, not so well. Has it changed that much? Let's welcome back to this table Vandana Hari, founder and CEO of Vanda Insights. Vanda, very much welcome back. The good timing in a sense. It's another OPEC week. Oil prices are on the march. Your thoughts to the outlook for the market, in particular, as OPEC Plus sits down to consider its plans for the month ahead?
Yeah, thanks, Sean, and good morning, everybody. And it's great to be back. I think definitely the OPEC non-OPEC meeting on Thursday is on the agenda, but I feel that'll probably be the least of market-moving news or events this week. Look, what's happening, the way I look at it, if you zoom out a bit, there's two opposing narratives in the market. One is, of course, a 4-month-old narrative, which is of supply tightness, scarcity, fears of it becoming worse, mainly because of all the sanctions against Russia. Partly that narrative has also been held up with signs that demand is not yet quite responding in a strong manner to high oil prices. And there's been evidence in the physical markets, right? Premiums are doing very well for spot grades. Asian refiners paying highest ever premiums for grades like Murban, for instance, which is jet fuel rich. So cracks have been very strong. Diesel and jet demand has remained strong. So there's that narrative. It has started to lose a bit of steam, I do believe, especially because of observations that Russia is managing to divert quite a bit of crude to China and India. The second narrative, I think, is still evolving. But it has started to tussle with the first one, which is what's going to happen to global oil demand in the second half, or perhaps more towards the end of the year, as economies are certainly slowing down. So all these economic headwinds, what are they going to do to consumer confidence, to the job market, not just in the US, but elsewhere in the world? And as a result, what the impact is going to be on demand. So that's the tussle we are seeing right now.
Let's welcome Sarah Akbar to the table. As always, a great voice with our podcast, CEO of Oilserve Kuwait and non-executive director of Petrofac. Sarah, would you share Vandana's view that the OPEC Plus meeting is a nothing to see here story? It strikes me yesterday that the UAE energy minister coming out and saying, we're doing what we can, did have an upward motion on the oil price. The OPEC did surprise last time out in terms of the adjustment of their production quotas. Your thoughts on whether OPEC Plus is relevant at this time?
Good morning, everybody. Well, I think the people are watching what's going to happen with Biden's visit to the Middle East. And if you look at the maneuvers and the movements of all our politicians, you will be surprised how much travel is between Saudi, Iran, Qatar, Kuwait, Turkey, Egypt. So there is a huge movement, which tells you that there is something really brewing. And when Biden was asked if his trip was all about oil and gas, he said, no, it's about security, it's about Israel security and stuff like that. So the question here is there any remaining capacity within OPEC to produce anything? And the reality is, I think everybody's clear. Yesterday, even the discussion between the G7, it was clearly said there is not a single barrel in OPEC or non-OPEC that can be produced, which is not being produced. So the question of supply, we are at the peak supply that physically and technically we can deliver. There is nothing much you can get from supply. You have to wait for a long time before you can add barrels. Even if you bring Iran into the game, even if you bring Venezuela into the game, still we are at a stage where we need to do lots of investments before we are comfortable with any kind of surplus supply. Now, on the demand side, as Vandana said, the high prices have not affected demand. This is the summer, and this is the season for travel, and the demand is typically much higher at this part. But again, think about it, end of the year, when the winter comes and Europe has no gas, still we are at the same kind of crunch that we are at this point in time. Now, going back to OPEC, what can OPEC do at this point in time? I think the big pressure on OPEC is to de-link with Russia. This is the only element, I think, the biggest topic of discussion for this visit of Biden and everybody here is we need Russia out of this OPEC. Plus, we need this relationship to end. There is no meaning for this relationship anymore because the whole mandate was to try to control the market and to stabilize the market, actually. And there's nothing that anybody can do now to stabilize that market. So let Russia out of this, and we need to squeeze Russia to the max. And as a matter of fact, if they want to squeeze Russia, they have to talk to India and China, not to the Middle East.
Let's go to Randall Mohammed, Managing Director of Petro Industrial USA. Randall, the big question on the demand side has been in recent weeks that the US was heading to recession. We've had sort of a fairly accelerated tightening cycle introduced by the Fed and another big 75 basis point expected in the next meeting. Where is the US economic outlook story? It seems to wobble from week to week. Last week, it's all the big bankers saying Armageddon, crash. And now this week, optimism in the numbers.
Yeah. Hi, good morning, Sean. Good morning, everyone. Yeah, look, thus far we've seen 3 interest rate hikes by the Fed, and we're expecting another one in the vicinity of 75 basis points. I would not be surprised, Sean, if it even goes higher, maybe 1%. I thought 75 basis points was too high, and here's the Fed being extremely hawkish and pushing again for 75 basis points. But, all economists have said that a recession is looming, but that recession would not come until 12 to 18 months down the line. And as you know, Sean, we are approaching the summer driving period, which is a peak demand period for energy in the US. Currently, air travel is on the rise, but air tickets have risen significantly, in some cases twofold and threefold. So look, you have this dilemma of pent-up demand, but you also have massive hikes in prices. And I think that is going to have a dampen really on demand come this summer. Now, as you know, Sean, President Biden is trying to push Congress to give us a tax holiday on the fuel taxes. And that is one mechanism by which the government could try to bring down energy prices and prices at the pump. Whether he's successful at it is left to be seen. But, as I said before, Powell needs all the help he can get. He can't do it alone. With interest rate hikes, and the federal government also has a part to play in bringing down prices.
Randall, is obviously we've heard a lot of moaning in the US, as you always do, when gasoline at the pump goes up to these levels. It seems like anything above $1 and Americans start screaming about gasoline prices. But what is the bigger factor here now going forward? The inflation, or are people, is interest rates, this robust sort of move by the Fed, is that breaking through to the front pages of the newspaper? I mean, are people still moaning about gasoline prices, or has the interest rates taken over the moan?
Well, I think people are mostly moaning about the high gas prices because that's what's going to hit them directly in their pockets. Yes, look, interest rates are significant as well because that is going to hit the folks who want to buy a new home, for example. Mortgage rates have gone up twofold.
I bought a new home last year that really is only worth 500 grand, but they spent $1 million because there was no interest rates on money, and money was free for so long. I think that's a big adjustment. The cash flow regarding 1% interest rate hike is going to start trickling through. Let's go back to Vandana in Asia. Vandana, the demand story in America, US clearly holding on through the driving season. The other big question is, where is China? In lockdown, out of lockdown, demand is what exactly? Economic performance this year looks like it's going to go well below target, but then we had President Xi last week coming out and saying he was going to still try hit his numbers.
Yeah, indeed. Let's talk about China and India, the two Asian giants, on quite a divergent demand trajectories. As far as China is concerned, I'm not overly optimistic of the government or Xi Jinping being able to bring the economy back full steam as long as he continues to pursue the zero COVID policy. And I do believe that a zero tolerance policy will remain in place. So we have seen Chinese crude imports softer year on year. The first 5 months are down by 1%. We've seen much more dramatic drops in refined products output. So basically refining rates in China have been low, barely at 65 and 70% respectively for the independents and the state-owned refining sector. I know some people have wondered why the government is not using that spare refining capacity to allow the refiners to make money. Selling the fuel at the current high prices, but the government is of course chasing its emissions agenda, which is pretty high. All in, so China has been sitting on slightly surplus refined product stocks as well. All in, I think China will remain in sort of holding pattern mode going into the end of the year. What does that translate to in terms of demand? Worst case scenario, we could see a flat, so basically no drop, no growth year on year, or we could see a marginal growth, maybe up to 1% in China.
On the consumption side, obviously demand, the importation of oil into China, where is consumption this month, next month? Putting that aside, China looks like they're clearly taking advantage of this discounted Russian oil. Your outlook for that in terms of it from a point of view of just the global demand, regardless of consumption?
Yeah, no surprises there at all, Sean. China will buy wherever it can find cheap crude, it will lap it up. And the advantage it has is the very considerable strategic reserves that the country has built up over the past more than a decade. And we do know that some of these oil stocks were drained out last year, especially towards the end of last year as the government was trying to bring down prices. So, reports suggest that some of this Russian crude, incremental Russian crude that China has bought and is expected to continue buying is going into the strategic reserves. To finish the story with India, the Indian, COVID is sort of in the rear view mirror in the country. Demand is rebounding quite smartly. An interesting phenomenon over the past couple of months is that there has been the price shock of the global crude prices has not translated all the way into the fuel prices at the pump. The government cut excise taxes last month, and the oil marketing companies, which are under government control, despite deregulated prices, have not been allowed to hike prices for the past couple of months. So basically, the price signal is not passing on all the way to demand, which could remain the case because inflation is a major problem for that country as well.
Sarah, you mentioned earlier the reasons or logic or lack thereof, perhaps, to renew the OPEC Plus agreement when it expires in September. Where does the Russia pouring cheap oil into Asian markets fit in that narrative? I mean, here is one of your sort of colleagues within OPEC Plus now drowning Asia, China, your biggest customer, in discounted oil. That doesn't seem like an equitable partnership. Maybe if it was only to last a few weeks, this clearly is going to last a long time. Your thoughts on that factor playing into the thinking of Gulf OPEC producers?
Sean, the price is not going down. So if this dumping of crude into India and China reduce the price, then I think people will say, oh, but you cannot do this. But as long as the market needs this dumping, because this is the only way we are keeping this price at this current level. I mean, imagine if you cut off all the production from the market and Russia is out, what do you think the price would be? I mean, so this is the logic. mean, okay, we look at it, we keep a blind eye because it is actually helping all of us to stabilize the market. But, the minute this dumping reduces the prices or gets it to where they really don't hate to see it, then it's a different story. Yeah.
So what would be the additional reasons that OPEC Plus would not renew their agreement beyond the market, does the market need a manager right now when everybody's pumping at their full? That's kind of exhibit A. But when you talk about a geopolitical meeting with the president of the United States and MBS going to Turkey and Syria and all of these geopolitical meetings, they're not meeting about whether there's a market purpose for OPEC Plus anymore. They're meeting around something, a bigger geopolitical alignment. And I'm wondering, what would you think that could be that would put the question mark over the renewal of OPEC Plus?
So it's about cornering Russia to the last point. So all this pressure is trying to isolate Russia from the Middle East, from the typical, allies they have, Iran, Syria, and the mechanism they are talking about now is to creating a semi-NATO for this region, where, they have some kind of alliance. I mean, this is the basic topics of the discussion in this visit of Biden, is that, look, we want the US to be here when we need it. So it has to be some kind of reciprocal relationship that we have between the Middle East, especially the Gulf states, and the US, so in order for us to sacrifice this relationship with Russia. Because otherwise, we keep this is our hedge. We have a relationship with Russia, with China, with India. We are neutral. We don't interfere in the politics of the bigger politics of the world.
But Russia is not.
What are you willing to give us if we cut off this relationship?
Well, Russia's not neutral, are they? I mean, Russia is being quite supportive of the Iranian nuclear program, which, in the failure of the renewal of the JCPOA, Iran's march to nuclear weapon capability is quite real now, and that's done with the support of Russia. How can that be aligned as Russia is our friend, but America is not our friend, and yet Russia is supporting a nuclear program in Iran?
So, Sean, you have to understand, this OPEC Plus game is no more really about the market, stabilizing the market. It is a bigger political game now. I mean, this is how it is transforming. That's why it is still there. That's why, they are continuing to say we will still keep this relationship with Russia and so on. And, genuinely, the Gulf is concerned about what Iran is doing, the nuclear, progress they are having. So that's why now all the discussions directly, I think, between the US and Iran is moving to Qatar, I think, next week or something, so that they can arrive to some kind of agreement where Iran stops these nuclear developments and stop interfering in the business of the Arab states. So it is that kind of balance. And I think the only card they have at the table now that they can play is this relationship with Russia. So it is really, the OPEC Plus is no more just the game or just to stabilize the oil markets. It's a political game now. Yeah.
Randall, just to wrap up this little segment, is there any real jeopardy for Joe Biden in coming to the Middle East for this meeting? There was some noise about, don't give in to the Saudis or whatever in the American media, but is this trip to Middle East even making the headlines in America? What's at stake for Biden in this, do you think?
Yeah, I don't think it's making the headlines per se. Look, I think he's just faced with so many domestic issues that going to Saudi Arabia, for the average American, they don't seem to see the connection between traveling to Saudi Arabia and having to solve all these complex domestic issues. But nevertheless, Sean, as you know, midterms are coming up. And, President Biden really is attempting to try and hold his own in both the Senate and the House. From the way it looks, it's highly possible that he will probably lose the Senate, and there's a good chance that the House is right on the edge. It can go either way. So look, I think President Biden really has to pull out all the stops now, both domestically and internationally. If the objective is to get Saudi Arabia to pump more oil, then great. That works well for his agenda to try and bring down fuel prices at the pump. However, I think he should spend his time really trying to get Congress, to approve that tax holiday. I think that for the average American will go a longer way than traveling to Saudi Arabia.
Well, I do think, just to wrap up on this segment, that the interesting thing about the midterm elections is that Biden will lose control of Congress and will not run for re-election. And so then will be liberated, if you like, because he won't be able to do any domestic agenda. He will be liberated to engage on the geopolitical stage globally, which is his natural resting place. And it could be quite a robust 2 years of American presidential engagement in global geopolitics, because there's nothing at home and he's not running for re-election. That's my 2 pennies worth on that point. Let's go to the survey question and get the view of the room on this point of OPEC renewal. Very simple. Will OPEC Plus renew their alliance in September? Yes or no? We've heard all sorts of reasons why they maybe won't or they shouldn't, and others that so we just have that sense of whether they will or whether they won't. Vandana, just looking forward now, it is still early in the trading week. Tuesday, Brent, last week was an upward swinging week. A downward swinging week. This is an upward swinging week. We have the Goldman Sachs coming out. ExxonMobil came out overnight. Big institutions calling for higher prices. The prices are going to trend higher. I wonder your outlook for that. And what would be the ultimate wind of the sails to take it out of this sort of new band we're in now, 110 to 120, 120 to 110? Did you see a momentum that breaks it higher out of that range?
So the week has kicked off on a slightly bullish momentum, and which seems to be emanating mostly from the G7 meeting in Germany, where the leaders agreed that, yes, trying to impose a price cap on Russian oil exports with a buy-in from consumers all around the world would be a good idea. I feel the market may have at least partially overreacted to that. I think it's a good idea in theory, full stop. Getting a buy-in from the 27 members of the EU, first of all, because they'll have to reopen the 6 sanctions package to tinker with the insurance and shipping bans that are going to be phased in 6 months. So getting that buy-in and getting a buy-in from China and India is going to be very difficult. Who sets that price cap? How is it adjusted on a month-to-month basis, or even more frequently? Big question mark. How will it be implemented? And as several European leaders have already said, it's complex, it's complicated. Implementation is going to be difficult. So that also partly answers your last question: is what might take the wind out of the sails of this latest rally, if you can call it that. I think the market will notice that this isn't going anywhere. It's not going to fly, I think, and certainly not in any kind of short period of time. The other one I think to keep an eye on is going to be the weekly US stocks data. I think the EIA has really kept the markets on tenterhooks. It did not release. I can't last remember when the EIA completely failed to release weekly data, which is what happened last week. So the expectation now is tomorrow it comes out with the latest week as well as the week ended June 17th. And so the market will have like a fortnight's worth of data, especially on US demand and stock changes to factor in, and that might end up influencing prices. But again, on a short-term basis. Just going back to the 2 scenario story, I think the demand is starting to crumble scenario is starting to dominate, but it will happen very gradually. So a slow grind down for prices. I don't expect a major leap upwards sustainably.
Sarah, just wrapping up your thoughts on obviously the OPEC Plus meeting this week. It's not one in which the future of OPEC Plus has to be decided, but in which there might be some signals. I know you're sort of articulating that you don't see the logic for OPEC Plus to continue, but how did you vote in the survey? And do you think they will find a new agreement for a new phase for OPEC Plus, Sarah?
Yes, I think now, since they established these relationships with these other countries out of OPEC, they will work very hard to keep them and maintain them, because I am sure there will be points in the future where they will need this again. And that's why they will renew it. It can be a different type of agreement, but for sure, these relationships that were developed over the last 3 years now almost, I think they are very valuable for OPEC, and they will try to keep them and maintain them. That's why I voted yes, they will renew some form or shape of a relationship.
Okay. Randall, you get the last word this morning with the survey result, and see where it says, oh, wow, a big 3-1 in this room. Will OPEC renew their alliance in September? 75% yes. Your thoughts on the outlook for that, and if indeed they do renew, Randall, is there a market reason?
Yeah, so I think, I agree with Sarah. I think they will try to maintain those relationships that they've built up over the years. You have to remember, Russia is just one component of the OPEC Plus. Yes, it's the largest component, but at the same time, OPEC wants to maintain those relationships that it has built. Of course, on the supply side as well, to ensure that there is supply. But I think more interesting is to see where Venezuela will go with this whole thing, or what sort of input OPEC will have with Venezuela, and also Iran. Of course, Guyana is there. Guyana is up and producing and will continue to produce more and more oil as the years go by. And again, it'll be interesting to see if OPEC will woo Guyana into this agreement as well. As for the U.S., Sean, as you know, the U.S. continues to produce, but the U.S., it's the same old narrative that producers want to return shareholder capital. So what we are seeing is production coming more from refracking of wells, drawing down on drilled but uncompleted wells. And the U.S. production is still well short, about 1 million barrels per day of where it was back in 2019, 2020. So again, it'll be interesting to see where the U.S. goes with oil production, but I don't expect a whole lot of drilling to take place in the second half of this year.
Okay, well, let's wrap it up there. I mean, my own thoughts on OPEC Plus renewing is it's complicated. For all of the without the sort of market incentive, oh my God, the house is burning down, oil prices are collapsing, we've got to find agreement, which is really the critical piece that brings all of these countries together. With the absence of that, oh my God, oil prices are getting too high, we must do what exactly? It's hard to see what the compulsion, what's the driving force of necessity other than continuing. But in continuing, you've got to be credible, and that's where quotas come in. They will have to revisit quotas in order for any renewal to be credible, and that is a complicated thing to revisit quotas, and there lies, that might be a hurdle too far for them. I don't know. Let's see. But this room clearly believes renewal is a slam dunk. Thank you, Randall. Great to have your insights. Sarah, as always, Vandana, great to have you back. We'll catch up with everybody 10:30 UAE time on the Daily Energy Markets podcast. Thank you.